Question is, how do we make money? There's an old saying, it says, the trend is your friend. And, well, what does that mean? What is the trend? Now, when I first started getting into this, I thought I really understood the trend. And then I found that I didn't. And then I found it was actually confusing. In fact, most people don't understand the trend. It's actually very simple and straightforward, and at the same time it's complicated by the fact there's more than one trend. There's the major trend, then there's the medium-term trend, and then there's the short-term trend. And all of them keep moving around, and sometimes they're in conflict with one another. And the question is, what do you do? How do you know which way you should be trading? And this puzzle consumed me for a while because I thought I understood it, and then I decided I didn't. And then I decided, well, obviously the thing to do, since I've been doing software engineering for about 30 or 40 years or more, 1973, you work it out, I thought, well, the obvious thing to do is to write an algorithm. An algorithm that will go into the details using the price and various other ways of looking at it to work out what the trend is. But first, before I go into that, let me just explain to you why it's a complicated issue and why traders do find it a little bit difficult, and then I'll show you what I've done to resolve that problem. Right, so let's look at trend and understand the trend is your friend. Well, here we go. Let's look at this. This is called the pound GBP USD, the pound dollar. Currently, we're looking at the monthly chart. Now, the monthly chart means that we're looking at monthly candles. For those of you who've not seen my candles training course, then candles are essentially these objects here. This is a candle, which is an up candle, and then this is a down candle, and then this is an up candle, and it represents the high, the low, the open and the close. I'm going to tell you very briefly what the high, the low and the open and the close is. So let's take this big white candle here that I'm pointing at. The low is the bottom of what's this called. This thing here is called a wick. This is called a wick, this little green thing here poking down. So as low as it went was there, and then it started there, and then it went all the way up to the top as high as that, and then it closed there. So this represents a whole month of traders trading, and it says it opened at this point and it closed at this point. It had a small upper wick and a small lower wick. That's a candle. Okay, so now we can see here we have candles moving up, candles moving down, candles moving across, candles moving up, candles moving down. Which way are we going? What is the trend? And one way of interpreting the trend is to look at highs and lows. So here is what's called a low, and here is what's called a high. Now you're looking for higher highs or lower lows. Here we've got a low which is lower than this one, so that's a lower low, and that means, by conventional wisdom, that means we are going down. So that means we're looking for a trade to the downside, but it didn't, it came up. Now this, remember, was a high, so this is a higher high than this, but this is a lower low than that. So we're kind of going sideways, we're not sure what we're doing. And clearly the market also thinks it's not sure what it's doing either, because it's coming back down again. You have to make sense of this as a trader. So how do you make sense of this? One way of making sense of it is looking at it at multiple different time scales. So looking at different time scales means we look at the week candles. On weekly candles we can see, well, it was moving up in general, but actually not in a straight line. It was going up, and then it was coming down, and then it was going up, and then it was coming down, and now it's coming down and down and down. So now what are we doing? Well, another way of looking at it is to look at the daily candles. And the daily candles are showing down, and up here, and then down, and then are we going back up again? Well, maybe. So then we have to look at something closer still, and we go into 4-hour candles, and we can see we're going sideways, down, sideways, up, sideways. Now what? So we can look at the 1-hour candles. Well, on the 1-hour point of view, we're clearly up and a bit of down, up, and we're taking the higher lows and lower highs and so on. So here's a high. This was clearly a low down here. This is a low, which is a higher low than this one. This is a high, which is a higher high than this one. And this is a higher low than this one. And this is a higher high than this one. So by conventional wisdom, that is now going up. So let's have a look. From the 1-hour point of view, come back there, we're going up. From the 4-hour point of view, we're not sure, we're kind of coming down. From the daily point of view, we're going down, but not clearly, because we were down here, then we've gone up, down here. This might be coming back up again, I don't know. From a weekly point of view, well, we're clearly going down. From a monthly point of view, well, we're probably going up. So you have to be able to make sense of all of this when you're trading. And one way of also making sense of it is to put things called moving averages onto the chart. So I've just put a moving average onto this chart, and this is a 200 period moving average. If you listen to the commentators on the news forecasts and things like that, you will often hear people say it has hit the 200 moving average, and they think that is absolutely significant, crucial, and all the rest of it. And from a monthly point of view, with the 200 moving average, you can see we are pretty much going sideways. It hit the moving average here, but then it went over it, and it came over top of it, and then it hit it and came back down below it, and all of this was all below it. So we know in some sense we're kind of below the 200 moving average. So is that all there is to it? Well, no, not really. What they often also talk about is something called the 50 moving average. Let's put that on the chart. So I've now put the 50 moving average on. Now, I'm not sure if I explained what a moving average is properly. Essentially, a moving average is an average of the last however many number of candles. And a candle is either a monthly candle, a weekly candle, daily candle, 4-hourly candle, and so on. So it's how many periods it is. Each one of those is a period. Now this is a 50 moving average, and that means it's counting 50 periods backwards, and it's taking the average of all of those, and it's saying this is the average of the 50. And again, people say, well, when it hits the 50, it will bounce. And sometimes that's true, and sometimes it's not. So it's not by itself a trading discipline that you can rely on. So here we have it hitting the 50 there, but here it hit the 50 and went straight past it. Here it hit the 50 and went straight past it. So it's definitely not clear. Here it's hit the 50, and people say it would bounce from that, but it didn't. It jumped over the top of it. So you can't rely on that as being a trading system by itself, but you do need to know roughly what you might expect. So from this point of view, we might expect, since it's over this 50 and below the 200, that it might stay in this period here. But as you can see, that's not always true either. It was in this period between the lines there, and then it came above the lines. You have to make sense of that too. So moving averages are one thing, but they're not enough. And highs and lows are one thing, but they're not enough. So you have to have more information than that. So once again, I thought, well, I'll write some algorithms, and the algorithms will tell us where we are and what we need to think about when we're trading this. So I created a thing called the Cato Bull Bear Butterfly Indicator. And it's basically an indicator which takes a huge amount of information does a calculation on it, does it all in live real time, and shows you where you stand. Essentially, this works like this. This blue line will be rising when price is rising. So here it's beginning to turn and rise, and this gives you a clue that the price is beginning to move back up again. Slightly before it actually does it, you can see it gives you the indication just before it does it. And this red line here tells you that if it's below that, you're looking to go down. So you're looking for trades down. And if you're above that green line, you're looking for trades up. So we're looking for trades up. And if you're in the middle, you're in what's called the butterfly zone. I call it the butterfly zone because it's the zone where the market does not know quite what to do. It's like a butterfly. It will flip from one to the other, and you can expect the unexpected as a butterfly. What you can do though is you can see that from this blue line which way the blue line is going, and it's going up through there, and you can see the price is moving up. So whenever you see that moving up, you must expect a price movement to the up side, and whenever you see that moving down, you must expect a movement to the down side. And when it's below the dotted line, that is the line above or below the line, when it's below the line, you should be looking primarily for trades to the down side, and when it's above the line, you should be looking primarily for trades above the line or up. So this one indicator alone will keep you out of a lot of trouble if you just pay attention to what it's doing, whether it's pointing upwards or downwards, whether it's above the line or below the line, and when it's above green or below red. Will give you a huge amount of information you wouldn't otherwise have. Now we can then use that to go in on different timescales as we've already been looking, so you can see for any given timescale what you might expect. So for the weekly, you can see that it is in the butterfly zone and it is coming down but leveling out. For the daily, you can see that it is down below 10. Look, that's in the bearish zone, the red zone. That's called bearish, below the line, below the red line as well. But it is beginning to flatten out and potentially turn back up again. However, at the moment we're really looking for trades only going down. But from a 4-hourly point of view, you can see it's sloping up, and it's clearly sloping up, but it is still below -7.5. It's therefore still going down, bearish, so we're still looking for trades to the down side. And when we're looking at the H1, that's the 1-hour chart, we can see we have conflict because we have the line moving up, down, up, and then it's above that green line. So from a 1-hour point of view, we're looking for trades going up. So part of the training is about understanding what you're going to do with these conflicts arising. Here clearly, from a 1-hour point of view, we are going up. And you know, changes always occur at the smallest level first. Changes like this are like the butterfly's wings in Japan, changing and creating a tsunami somewhere else. You have a small change at the 1-hour level, and if it continues to proceed at the 1-hour level, that could initiate a change at all of the other levels. So that's really what you've got to watch out for. Anyway, that is the Cato Bull Bear Butterfly Indicator, which will keep you out of a lot of trouble if you just pay attention to it. What you have to do is look at multiple timescales down to the finest level of granularity that you personally are interested in trading, and that's the level at which you make your final decisions. You want alignment across a number of different levels, and you want to achieve that by making sure that the Cato Bull Bear Butterfly Indicator is in agreement across more than one level, and certainly across the 2 lower levels that you're planning to trade. So there you go, I hope that helps, and let's move on to the next subject we wanted to talk about. So what we've just talked about really is the medium-term trend. and how you understand what the medium-term trend is. So this is using the Cato Bull Bear Butterfly Indicator. Cato is of course my name, Cato, and a friend of mine once said it ought to stand for something, so I decided it stands for Cash to Order. C-A-T-O, Cash to Order. Now clearly I can't make any promises. I can't tell how you're going to trade or what you're going to do, and I can't tell anything about you really. I mean, I haven't met you, much as I'd love to. However, what I can tell you is that if you bring the ideas that I bring to the table with the Cato indicators, that you will trade more successfully. You have to be very, very disciplined, you have to be very, very careful, and you have to do the money management, of course, as we've already talked about. Now let's talk a little bit more about the next level. Let's look at the shorter term trend. Now I've created another indicator for this, and this is called the litmus test. And the litmus test goes in and gives you a finer degree of focus, I suppose. Focus on where it is that you need to be paying your attention. So we now know where it's going in terms of the medium term. We've got a good idea of what it's doing. We know what we want to do. Now we want to look at the litmus test and decide whether now, at this moment, is a good time to do it at any given time scale that we might be looking at. So let's have a look at that.